are the stocks that you might want us to start looking out for specifically? Maybe some of these outliers, or should we call them, maybe, stocks that people are not probably paying attention to.
For example, if GT is moving, you look at GT and you say GT is 154 naira. GT is doing the same thing almost with Fidelity Bank. All right, Fidelity Bank is still at 20 naira. Fidelity Bank is also warming up. All right, so you want to dive into that Fidelity Bank. So those drag alongs will also push some of those stocks as well, even without fundamental. Those stocks will also go.
What we're advising really is for people out there is to just use an asset management company. And I can tell you for a fact, because I also use SCM Capital. It's seamless with them. The customer service is excellent.
Let me start from the book, The Richest Man in Babylon. Right? It tells you that for every of your income, for every money that comes in, just tell yourself that 10% of that is not going out. So you're saving that. But what I will advise, advocate for people is that when you have your money, just tell yourself that a fraction of this money, irrespective of whatever is demanding or pressing on me now, a fraction of this will go into my investment. So I don't need to wait and aggregate, because inflation doesn't wait. There is no easy time to save. It is just your determination to do that gives you that ease of doing this.
I get you. Hello there. Welcome to another episode of the Broadstreet Updates in association with SCM Capital. This is the show where we bring you everything that's happening in the financial service sector, particularly in terms of investment, in terms of, preserving your wealth, in terms of savings and making wise investment decision. And I have my partner with me today, as usual. Jide, how's your week been? Jide Downs is the head of research at SCM Capital. But before we jump in, I'd like you guys to do us a favor. I want you to subscribe to our YouTube channel here and follow us across all social media platforms, both on the B360 TV, B360 entity. You can also check, this is b360.com, to see some of the articles and interesting information we have for you there. And I also want you to follow SCM Capital, because we post content on our socials every day, just educating the people about financial management, financial independence, financial empowerment, and everything in between. How do you deploy your cash in the right direction? So you will really want to follow SCM Capital across all social media platforms. And also, if you have inquiries, there's a number scrolling on your screen. You can always put a call through to start your investment journey. So Jide, so let's get into it, So what's the performance generally? The all-share index, the year-to-date performance, month-to-date. If you guys are week to date, you might want to check.
All right. Yes. Thank you and good morning, everybody. The equities market this week actually had a mixed performance. There are a couple of drivers responsible for that week mixed performance. Okay. So we have a couple of gainers and also decliners as well. Of course, there's those decliners, we call them profit takers, because when you have hit your high sometimes and you have some macroeconomic data coming up, so you actually want to save some of your gains. So that was what was responsible for. But for year to date, the equities market has done 62% year to date. All right. It closed about 54% in April. And right now we are 62%. So which shows that the market is still very strong. However, this week, the major movers of this, of the trend this week had been the inflation situation in the United States of America. And you know that United States recommands the global economy. Once there is an inflation trigger in the United States, it's going to cut across the advanced economies and also developing emerging markets as well. So that is what has been responsible. And what actually caused that was the energy situation that is now feeding into the food inflation. All right. And the World Bank came out to say that if this war lingers and the oil price remains around $100 per barrel, it's going to stretch through the end of the year. So what that means is that we'll be seeing equities market moderating, while the yields market will be going up because people now begins to call in for higher yields to safeguard their real return in that particular end. Also, this week we'll also see Nigerian trying to take caution, investors trying to take caution because inflation data in Nigeria is going to come out today. By 12/1 is going to come out. So if that has happened in the United States of America, Nigeria is not completely shielded from what is happening globally. So investors are also looking at that direction and say, okay, what are the sectors that are going to be much more impacted? Where are we seeing our gains? Can we begin to call in the gains cautiously ahead of that data being released? And don't forget that this data is also very particular, is of concern to CBN that will be meeting for the second time this year in terms of their MPC meeting. So that is going to guide CBN as to what policy direction the CBN is going to be doing, whether they will still stay hawkish or try and relax or even stay the way it has been. So investors are now beginning to weigh their options and say, we'd rather become cautious and then wait this week out and let's see what happens next week and the rest like that. All right. Aside from the negative side, there are a couple of positive things that also happened this week. First Bank released its Q1 results and it was very fantastic. At EPS of 5.99 naira, it showed that, yes. So it showed that they've taken out all of the pressures that they faced, the likes of the Otude coil era and the rest like that. So this is a new era for $10 and the rest like that. And with a 5.66 naira EPS, it showed that the forward EPS is going to be doing like 20 naira, 23 naira. So for that price of 70 naira, it's just trading like 2 times. So it becomes an opportunity for investors to see the outlook, the growth in First Bank. All right. And just on Wednesday, or Tuesday, Wednesday, thereabout, Otedala has to buy over 400 million units of that. So that is also very significant. That's for the 3 billion naira. So that gives us a direction that the banking stock is now becoming resilient and has some prospects for the future. So investors now also queue within in that respect. Dangote is also saying that he has obtained is going through regulatory approval for London listing of the Dangote cement. So people are now beginning to see that, okay, what's going to be the price of these stocks when it gets to London Stock Exchange? Looking at what GT Bank did last year when they listed on the London Stock Exchange, and you can see the price of GT Bank at over 150 naira now. Wow. So when they listed at 70 naira in London. So you can see how fast that appreciation has come. So people are now beginning to settle that Nigerian market is not just going to be domiciled in Nigeria or Africa alone, is now reaching out to global presence. All right.
And if you look at what they're even doing, one of the things we're seeing is that for some of these banks, for the first time, we're seeing some of their revenue getting up to 50% from outside of Nigeria.
Yes.
Then you see how Dangote is also trying to partner with the Eastern African, the EADC guy, to develop their oil blocks and all of that, and try to globalize his company in a sense.
Yeah, sure.
Because what he's saying now is that he's targeting $100 billion in, is it asset or revenue? That's in the next 10 years.
The assets. Yes.
And of course, most of these guys can get their dividends in any format currency they want.
Yeah,
but the anchor currency will be dollars. But of course, you can get a cash rand. I'm sure Naira, then pounds and dollars or something.
Sure. Yeah. So that's part of those things that have been moving the market a whole lot this week. All right. Though some people took profit, like I said, some people took profits and looking at, okay, we'll reach the 52 weeks high. What are we expecting? Allowing new entrants to coming into the market. So if all these tides are I'm sure the tides are going to be over by this week or next, and then we'll be able to project into the future as well. Now, again, the Naira is still very strong. We've seen the Naira appreciation over the dollar in spite of what is happening overseas. So that also gives confidence to global investors and saying that Nigeria is a place to be. And the president, he was in France. He signed some deals. He met with some global investors. He was also in Kenya 2 days ago, where they co-hosted with Kenya and France co-hosted, and currently it's in Kigali as well. So a
African
couple of
Europe,
economic discussions have been coming up ahead of elections. So all of these things is beaming global attention to Nigeria. All right. And the first place where you will see these positive signs is the equities market. We said the equities market is more like a barometer for the entire economy. So that is why you see it in the equities market. Another side is that the fixed income market as well. The yield had relatively been very flat. All right. So it tells you that for a 15%, 16% year, full year yield is still less than what you can get from the equities markets, and the equities market is much more liquid. So that is one of those things that push the market this week.
Okay, makes sense. So one of the things I want us to segue into today is to say, so looking at it, we're almost ending by next month. H1 is over. What are the stocks that you might want us to start looking out for specifically? Maybe some of these outliers, or should we call them, maybe, stocks that people are not probably paying attention to. Because the other day I was checking an email that was coming through, some of these recommendations and all of that. There were certain companies that were on the radar. Of course, one needs to be careful. At times, some people are rallying the stock to have a cash out event. So I'm not talking about those ones. I'm talking about the ones that the fundamentals are that we're probably not paying attention to. Look at how Transcorp was it last year, hotel particularly where they started moving and started rallying in a very crazy way and ended the year with about 102 or something, about 1,000. How many percent?
100,
100% or more. Yeah, so something like that.
Looking at the equities markets, there are a couple of things that are responsible for the performance of each of those stocks. Majorly first is the fundamentals of those stocks. Okay, so if the fundamentals are right and the economy also supports that fundamentals to always be right, and the future projection of that company in terms of the management efficiency, in terms of the cost efficiency and the rest like that, and you have some strong margins too, those things move the price of those stocks. Aside from that as well, there are a couple of drag alongs, okay, in the sense that if GT is moving, for example, if GT is moving, you look at GT and you say GT is 154 naira. GT is doing the same thing almost with Fidelity Bank. All right, Fidelity Bank is still at 20 naira. Fidelity Bank is also warming up. All right, so you want to dive into that Fidelity Bank. So those drag alongs will also push some of those stocks as well, even without fundamental. Those stocks will also go. However, before you buy stocks, and that's why we always recommend professional. You are not there. You don't understand those metrics and the rest like that. So people need to interpret those metrics for you. So before you buy those stocks, you look at the growth prospects. You look at the economy which they operate, and you look at what exactly can be the benefits for the economy. Take, for example, maybe I should mention that stock. Okay, so Tantalizer has an agreement with some companies overseas, and now they are going to blue economy. All right. Right now, what is happening globally now is that Iran is trying to say that they want to have a total control of the Straits of Hormuz, which is an opportunity for blue economy. Now, in Kigali, the president just discussed about the blue economy, how Africans can take charge of the blue economy. So that tells you that for any company that is now positioned in that respect or in that environment, is going to have some positive outlook within that environment. So you begin to project into that company, into the future of that company. However, some of these stocks may not be as liquid as those top ones as well. So you also have to be very careful in terms of dabbling into those things. So that's just...
Yeah, I get you. Well, that's a very political answer. But yeah, I know that, of course, typically one needs to be careful in probably recommending so people don't say, you're the one that said. But I think I get the whole idea. The summary is that people just need to watch out for certain indicators, the direction, policy-wise, global attention in terms of topical issues, dictate some of those things. And the general happenings all over the world. For example, now it's a no-brainer for people to know that oil and gas stocks is in the interim. It's a good place to invest. Because now, because of the Iran US
conflict, the Middle East crisis,
so that's creating an unusual arbitrage for them to cash in. How sustainable that is, the future will tell. So, but so far, the world is still like holding on in that. They've chilled a bit for now, but I don't know what's going to happen.
Even with the chill, the price has remained around.
Yeah, that's what I'm saying, because it's it's like more like a pause, not like a stop.
Yes.
So everybody is still looking at it from that dimension, and sure. But that's a good one. Now, let's move into in terms of the fixed income market, the bonds. What is going on, the treasury bill and co? How is the market? What's the current state of play in that?
Okay, yes. For the bond market, the average yield for the federal government bond is still around 18%, right? And when you compare that with the inflation, the real return is about 3%. So that's why. And what actually happened in the bond market is that it's not that it's not liquid. However, the focus of the federal government in terms of borrowing has shifted away from the local markets to the global markets, the dollar market. So that's why the fixed income market is not receiving that much momentum as compared to the equities market. All right. So that's why the curve is relatively very flat. So once you buy, the best for you is to go for fixed income market. You rather do two strategies. Is either you mark to market, that's available for sale, or you hold to maturity. All right. So if you hold to maturity, you just spread your return all through the year. But if you are a trader, you are going to be watching the oscillation in the yield curve. So, but right now, the yield curve seems to be very, very flattened. So that's why that much interest is not that in the first market. It's not that people are not playing. They are playing, particularly for PFAs who have the mandate to, and also some fund managers, asset managers as well with their funds. They have the mandates to buy some level of, also quantums of fixed income into their portfolios. However, the gain is not, and the momentum is not as that of the fixed income market. And even the federal government is also like the next auction that is coming up on Monday. They're just coming out with 600 billion. And how much is 600 billion compared to 5 trillion system liquidity that we currently have? Right. So that tells you that that market is oversaturated. So the best place to come on is the equities market. So that's why what's happening. Then the treasury bill as well. Yes, auction used to take place every 2 weeks. And the yield is still at 19% year to date and currently. So that's why, except for some banks and some global players as well that would put their portfolio more into fixed income, those are the ones that have been playing more into that space. All right. However, those who have that war chest, who has that risk, who are very deep in risk taking and the rest like that, would rather sit down in the equities market, because that yield you want to get in 1 year, they can always get it in 1 day or two.
Yeah, so makes sense. Makes sense. So how about what general state of play with dollar denominated investment here and there? You know, I know that for you guys now, and as to other asset management companies, you have some dollar denominated.
Yes.
How's that faring? Okay, I guess you guys is always as fixed rate.
Yeah, sure.
But how's the performance generally, notwithstanding? Yeah, you have guaranteed an X amount, right? Yes. But what is the state of play with dollar denominated investment?
Of course, yes, dollars are always invested in dollar bonds, dollar instruments as well. So, what happens to the dollar
is equities?
No. There's no way you want to buy those equities. So you have to just go to the euro bonds market and the rest,
which is stable,
which is very, very stable and predictable too. So that's why you have that guaranteed return on that investment. So the euro bond market is also relatively very flat. It has not been distorted by what is happening overseas, even when dollar is appreciating, but you also have that oscillation, that volatility as well. It appreciates today, goes down tomorrow because of what's happening in the Middle East. However, the Nigerian euro bond or the euro bond space as a whole has not been pressurized. All right, so the yield remains relatively very flat as well. So it's not been pressurized. So
that makes sense. So let's just now, talk about the whole idea of putting this together in terms of how will you advise one's investment bucket to be at this moment?
All right.
So we can also paint a scenario and say, see, I have 5 million now. This is May 14th or 15th.
Yeah.
How should I play
Okay.
to get a good return at the end of the year? Let's say I'm just a zero starter today.
Okay.
I have a bonus that they paid me in my office or what have
Alright.
you. I have 5 million or 2 million. Of course, we'll talk in terms of percentage.
Yeah, percentage, yeah.
How do you advise to say, okay, so what do you think will be an ideal target? Let's say I'm starting now, from now to the end of the year to target.
Okay.
10%, 15%, 30%. Can I get, how do I maximize my investment based on assortment of my portfolio from
Alright.
the fixed and equity standpoint?
Of course, yes. Yes. As it is, you have to divide your portfolio into two. All right. The defensive side and also the risky assets are. And what is playing in the financial market right now is to play more on the risky side. However, which is the equities market.
Yeah.
Yes. However, there are some selective stocks that you must also buy. Those stocks that they have growth prospects. They are called growth stocks. Those ones that are outliers, those ones that are premium stocks as well. Okay, so you put I can say right down, you can put, because you are a starter, you also need to understand your risk profile and the rest like that. So, but you can do a 60-40, 60 for the equities market and 40 with the fixed income market. So the fixed income market stands like a defense for, so when you go and attack with your equities, the fixed income stands as a defense. So with the fixed income, you already know that you have 19% or 18% of return assured for the value you have placed. So you can now begin to play with other ones. Now, the economy, the entire fundamentals, the entire macroeconomic indicators supports the rallying of the equities market, which gives you an opportunity or a kind of confidence that you can get a 30% year to date. For your full year return, you can get 40%. And it's also risky. You can get less than that as well. Right? It just depends on how proactive you are and how well you are be able to dance around all of those risky assets. But we can tell you categorically that there are some stocks that are resilient. Even when they dip today, you can be assured that they are going to spin up again in the next 1 or 2 weeks. All right. So all of these things support that. Now, the election that is coming up as well is also it's not politics anyway, but the election that is coming up is also going to be pushing some liquidity into the system. And you know that liquidity for savvy investors will always look for the investment, will always look for return. So investors will now look at where is that return. And once the entire noise continues to support a particular market, you see people moving into that market. So once you move into that market, you just have to be very cautious, right? Your optimism, that's why we use one language in the environment, cautious optimism, all right? So when you are 100% positive about something, you don't test the depth of the water with your 2 feet. So you have to go with one and then get out again. So I would just structure a portfolio around 60-40, all right? Yes. So
yeah, but again, I think even in that 60, what I would advise is, and we've emphasized over and over again in this show, the importance of asset managers.
Yes.
So rather than trying to mix it yourself, if you don't really know how to maybe prepare semo, you know that you can have a lot of, stuff, coagulating, or you can even have a flat out pap-like semo.
Exactly.
You understand?
Yeah, sure.
So you don't, like we say, you don't want to chop beans. Like we're saying now, the balance, it might just be sensible to work with people that know how to mix it correctly.
Yes.
Again, chasing the stock performance, because if you actually want to play, if you want to be a trader, then it means that you have to be reading, you have to be watching the market, you have to ingest a lot of data and be able to make sense out of it. So the whole idea is at what time do you now have to do your daily work and some other rules in your life, like a husband, a father, So so what we're advising really is for people out there is to just use an asset management company. And I can tell you for a fact, because I also use SCM Capital. It's seamless with them. The customer service is excellent, response time, all of that. And the return has been very fantastic for the investments that I've done. And the timeline, just even if I want to liquidate within 1 or 2 days, I've liquidated, I have my money, and everything is fine. Of course, again, It's a company that has been in existence for over how many years now?
Yeah, and of course, as you know, we've been metamorphosizing it. So it's almost 50 now.
50 years. And they're still standing. So that speaks to, longevity, reliability, and what have you. So the whole idea is that just deal with an asset management company. It's safer. It's easier. That's what I would say.
Very, very.
Now let's talk about savings and investment culture in Nigeria. A statistic came out. I don't know if that has improved, but I doubt if it has. Since then, we have entered into multidimensional. We're more entrenched. Let me put it that way. Deeper. We sank deeper into multidimensional poverty as a nation at 63% thereabout. But then it's been said that it's only 2% of Nigeria. Is it 5 or 2? I think 2% of Nigeria that have 500K and above in their account. Or maybe that stat is incomplete. Maybe even though people have 500K, that's like their near looking position. Maybe it's not totally indicative of our investment.
Sure. Maybe they're just looking at the
current. That to an extent is a pointer to also where we stand, because your liquidity or your near liquidity even shows your spending habit vis-a-vis where you put your money. Because I've had instances also where people are saying they've locked their money in this, so that means, but generally it was the total, what's people's even reaction to investment products from where you sit?
Yes, the reaction has been much encouraging in recent time, particularly this year as well. It's been much encouraging because of the market knowledge that's been shared all around now. So it's been very much encouraging. However, because of the disposable income of people, because of the level of inflation in the economy, because of the prices of commodities, it has not really grown as expected. All right, you talk about per capita, so that tells you that yes, even when people are earning, those channels at which those things are going to, they are really, really demanding. So that is why we say that the saving culture of people has reduced, right? Because you can't have money and you go hungry. So you definitely still want to at least survive for a period of time. So, however, if all of these challenges have gone, I'm sure that even people that we've spoken to as marketers or social managers, they have that passion to go into that. Like Yorubas will say, money will say, if I'm not around, nobody should discuss me. So the knowledge is there, the interest is there, but the capacity is not there.
Yeah, it can actually be challenging. So the whole idea also is to look at several models that have been advised in terms of savings to investment. So there's a school of thought that says immediately as you're saving, you are investing.
Of course, yes.
So that you don't go and bust the money. Blow the money, as we say in the pidgin parlor. Some other people say aggregate and accumulate. It toughens you in terms of discipline. Then they give you the opportunity, to be able to invest into something more bigger. So which means rather than save, let's say, as I'm saving every day or every other day, I'm putting it into investment. The other thing is saying, no, accumulate maybe for 6 months, 1 year, then I invest. What do you advise?
All right. Let me start from the book, The Richest Man in Babylon. Right. It tells you that for every of your income, for every money that comes in, just tell yourself that 10% of that is not going out. So you're saving that. However, there's a big difference between savings and investment. All right. Savings is just you dump the money somewhere else and it doesn't grow for you. Bank charges comes in and a whole lot of that. However, with investment, investment is a form of saving. However, it's a saving that has returns for you. So it works for you. So bulk of that, what I would advise, advocate for people is that when you have your money, whenever money comes in, just tell yourself that a fraction of this money, irrespective of whatever is demanding or pressing on me now, a fraction of this will go into my investment. So I don't need to wait and aggregate, because inflation doesn't wait. All right. Investment return doesn't wait. All right. So if I say I want to wait and aggregate and say, instead of buying Citibank Bank at 129, and I say, no, what I have now is 100,000. So let me wait till the next 6 months when I will have gathered 1 million naira. Zenith Bank will have appreciated to 150, 300. So what happens to the return because of waiting? So that waiting period is even eroding your buying capacity, your presence. So I will always advise that as soon as money, real time, exactly. So real time does begin to come in into the market, and those things have been democratized now. So you can do that at the palm of your phone. You can always do that. However, when you want to start investment, you don't start investment because somebody advertised that to you on social media and the rest like that. Like you have advocated, go to professionals, let them give you that's market intelligence, that's advice street service. Okay, so you can always get that. Even when you read some books, some of those books are theoretical. All right, you need those who are already on ground to understand those metrics, to see that when you plug in X, Y, it's going to give you Z and the rest like that. So I'll advocate for that. So there is no easy time. There is no easy time to save. It is just your determination to do that gives you that ease of doing this.
I get you. Because several bills are just like staring at you and all of that. There's something the bank does which is good, but I've even requested my bank and they said there's no such service. And I'm putting it out there for some of the banks that can dimension it to say that not only can I do a standing order to say every on the 26th or something,
charge a particular amount.
An X amount. What if there's no money there? What if I've taken the money out? How about that I can say anytime money comes to my account, 10% goes. So I'm not even going to see it. I'm not even going to touch it. So it's not the case where I can play around it or I'll say, okay, this 1 million is there. Then by tomorrow, no, I can't drop this 1 million because something else has come up. Because something will definitely come up. I think that if bank can have that kind of service, it's going to enhance that real time. We can set up. But what they're saying is that I think there's no, you can't build, at the HAP level or at the
you can't
ERP level. It's almost like you can't build it because it has to be customized.
Yeah, sure.
But maybe that gives an opportunity for some of these fintechs to plug in, do it at the API level. But now I know that some of these fintechs can do it, but most money does not come through fintech. Say if you're a business person,
so you have to go through
or some people that would till tomorrow I don't have some of these fintech apps. I don't have any. I use my regular bank account because maybe if they serve me, So I wish that each time money drops into that, then the money automatically gets deducted.
Yeah, sure.
But I'm thinking now that an API should be able to sort that. Where if a fintech plugs into an API. So in the same way that that there's some things that you do on your system that is just on you install the thing in your browser. Okay. And it does certain work for you. So it's not a full app. Neither is it a full software, but it's riding on something. So I believe that if, like plugins, we'll call it plugins. I think I'll have that conversation with my IT team. Okay. It's going to really, really, I can guarantee you. Yeah. And over time, you will have been used to it.
Sure. But actually, you have to scale through regulatory or particularly the CBN. You understand? Because you are going to be riding on someone else's BVN and the rest like that. So you have to still coming into those banks.
No, I know. That is absolute. It's a fintech product.
However, I will advise this. For salary earners, you can initiate that from your payroll, whatever. So you can tell your accounts department that, okay, since you always charge tax from source, you charge pension from source, also charge this from source. So
okay, that's a very good strategy.
Yeah, so
again, note that 80% of Nigerian earns daily income. In fact, that's the reason why this plugin will work. If 80% of Nigerian earns, and that's why you even see, the reason why you will see that is that in most trading areas, you see that people do daily thrifts. Somebody goes around, they still do it today. People will still go around and collect those monies. How about if we automate it from whatever way you can. And I think it's quite easy. Now, even if you're looking at it from the trading guys, it's even sensible because most of these market women already use all those fintech app like OPay and PalmPay and MoneyPoint.
For sure.
I think they are the natural use case for this.
Yes.
Where you already have a lot of people.
Yes, but their income is also cyclical. It's not.
Whenever it comes in, I'm sure that you can survive a 10%. Even if the money is 20 million, trust me, at least you have a profit of like maybe if you look at a 30% margin on the average, then you have 6 million. So if they remove 2. So we just look at it.
Yes.
And it's not for everybody. I'm saying that I should be able to have the ability to opt into that.
Yeah, sure.
Because I believe that that's going to naturally, somebody said something and I believe he said that you don't need discipline once a system is in place.
Yes.
You understand? Discipline is needless. If there's a system, there's an automation.
The intensity of the discipline.
Yeah.
Exactly.
So the difference now is that you now use your discipline for something more, something different, but not for a systematized. So, for example, let me tell you what I did. You see, one time I realized that after I try to pay myself salary, how difficult that can even be as an entrepreneur. I realized that if I'm not careful, in 3 days, my upkeep will be gone. Gone. So it means that I would have to struggle throughout the month. I have to borrow or maybe temporarily take money from the business, which again is not sustainable. It is a form of indiscipline. So I realized the concept of if there's a system, discipline is unnecessary. Sure. You know what I did? I went to my bank and said, see, this account, make sure that whatever happens, I can't take out this X amount. So, and that saved my life in the last 3 years.
Exactly.
Each year I keep increasing the daily limits.
Yes.
But the whole idea is that I can't do more. In fact, I used to joke, if, for example, I've exhausted my limit today and I need to probably give somebody money or send money, I'll say, you have to wait till 12 in the night. I will now jokingly say that that's where the what do we call it? The spirit that brings money for me comes. It's 12 in the night. I just joke about it. But the whole idea is that I can't do any other transaction till it's 12. And that money stretches suddenly to the end of the month till I receive my new payment. Otherwise, you can't believe that something that will last me for 20 days at times, if I hold that money without that system, I'm sure I will finish in 3 days. Something will come up, something will pop up and all of that. So I believe that some of these automation products can work. I think it's if anybody's listening to it amongst the pay guys, that will be a good one. Because what happens is even if people tell piggyvest to take out their money on the 25th, because they know they have that process of before the 20. I remember my wife was saying there was a time I think every day. I think the mandate was every day. Wow. Which is close to this. It should be every transaction. That's what I'm saying. I should have at every transaction there. That she will quickly go and take out the money that piggyvest will soon take out money because she needs to. Because there will always be something.
Yes, of course.
And that's the reason why we can't dimension it. This year, for me now, I've been really struggling with my savings. And it's not as if one has not been making money. But the whole idea is that there are just gazillion items waiting to consume that cash.
Exactly.
So I believe that, but that I think with this we can just wrap up. I think it has been another great one. People will be able to pick a lot of things from what we've said. So guys, that's it on this episode of the Broadstreet update in partnership with SCM Capital. Do not forget to follow us across all social media platforms. Follow SCM Capital also across all social media platforms. It's going to be on your screen. Subscribe to our YouTube channel, both YouTube channel, and turn notification on so that the next time when we come, which is another week, you'll be able to be notified and be able to watch this interesting information we give every week. So I'll catch you on another one. Till then, keep winning, keep investing.
Take
care. Bye.